Good afternoon. We are almost done with this two-day conference. And yesterday, at the end of the day, we had investment due diligence. Some of you might have been here. And today, we're going to discuss operational due diligence, which is another side of due diligence. So, as Maxine said, the title is Trust, Verify, and Survive. Operational due diligence lessons from the battlefield to the boardroom. I think we're missing one person, the pilot, special force pilot. That's, I'm going to introduce actually everybody here. So my friend Robert Materazzi is the former CEO of Luca. He will bring lots of insights about due diligence on crypto, actually, because none of us is crypto here except him. So I think he's going to be replacing Anthony replacing Brian Stern.
Sorry, I gotta go.
He is from Grey Bull Rescue, and he's actually back to rescue people in where's that? Jamaica, right?
He's in Jamaica right now. He's supporting.
And Robert is on his board, so hopefully he's fine and everything. You're taking care of his.
It is. He has a good excuse to not be here.
Yes. Yeah. Okay. So Anthony, Jennifer, Alena, Brian, Candice, and Robert, briefly introduce yourself.
So, Robert Materazzi, I'm not Brian Stern, but work closely with Brian and happy to fill in for him. And I'm a venture partner at Blockcelerate and do, among other things, such as the Chief Strategy Officer for Grey Bull Rescue. And thanks so much for having me.
Candice?
Yes, thank you for having me. My name is Candice Freeman, and I'm a senior associate at Travers Thorpe Alberga. We specialize in Cayman Islands and British Virgin Islands law, and I'm in the investment funds team.
Hi, my name is Alina Carr, and I'm Director of Operational Due Diligence at Russell Investments, responsible for the oversight of third-party managers and funds specializing in alternatives.
Okay.
I'm Jennifer Keeney. I'm the head of operational due diligence at BNY Advisors, which is the outsourced CIO group of BNY Mellon Investment Management.
I'm Tony Martinez. I'm a partner at Mercer. I'm head of operational risk and due diligence, and really happy to be here today. Thank you.
Fantastic. Okay, we'll start with you, Anthony. So when you look across the asset management landscape, are you seeing differences in how AI is being implemented? Yesterday, we talked a lot about AI on investment due diligence. And can you share what you're observing on the public markets side versus in alternatives and private markets?
Thank you. Yeah, we see, to put this in context, we have 40 people globally that do operational due diligence that are based in countries across the globe. We see about 800 managers every year through our team. So we get incredible volume and call it reps of really seeing these organizations. We're a completely commissioned team, which means allocators hire us and point us to those investments. So we've been seeing large public managers for years, over 20 years. We've definitely seen the shift now to smaller boutique emerging managers in certain asset classes. So when it comes to AI, it's a really interesting ecosystem. I feel due diligence has evolved over the past 10 years. Instead of being, call it the cops, interrogating folks and asking questions, it's been much more of a collaborative discussion because I think we have this technology that's really a game changer in table stakes that's going to impact every industry and particularly due diligence. So what we've been seeing on the large side compared to the small, the large managers, the Blackstones, the BlackRocks, the SSGAs, they have incredible technology resources and have done great work over the past decades in cleaning their data, making sure the hierarchy of data at a client master, security master, product master is all very tight. So they're benefiting from being able to quickly implement AI tools. Take that to an emerging smaller manager that might be, you're hiring a team, right? Whether it's a smaller private credit shop, they don't have the infrastructure. They may be more reliant on third-party partners to kind of get them to go. So there really is this have and have not. We're learning from the big managers, even consultants like Mercer, to learn best practices to be able to advise the smaller managers on where to go. So definitely a little bit of an arms race, the bigger, more technological managers are taking advantage of that right now.
Okay, great. So Jennifer, you've been in ODD business for what, 20 years? I mean, you look 18, but it's been 20 years, right? Or over 25 years. You've been actually doing operational due diligence. Is it correct? So how has the operational due diligence process evolved over time, especially in how you interact with fund managers, and what role has technology played?
Yes. So ODD has evolved certainly over the past 20 years or so. It's always been a document-heavy type of exercise where teams have historically sent questionnaires to managers through email and just collect their documents through that way. And what we have found is that since COVID was really a turning point because that's when the in-person meetings had to shift to virtual meetings, which was really unheard of then, not very readily accepted by our team. But we found that having virtual meetings allowed us to screen share documents with managers and have more interviews with managers across more regions, and it was more accessible. And then since then, there have been a proliferation of applications out there that have digitized due diligence questionnaires so that we can communicate and interact with our managers in a lot more dynamic way. The managers can respond to these questionnaires a lot more efficiently and update their materials more quickly.
Sure. Thanks a lot. I'll give prompt for Elena, a little bit different here. So as artificial intelligence becomes more deeply integrated into how we assess and monitor fund operations, it challenges one of the most fundamental aspects of operational due diligence, the role of human judgment. So AI can process massive data sets, identify patterns, and detect anomalies far beyond human capacity. Yet the real question is, how do we balance those machine-generated insights with the intuition, experience, and contextual understanding that define human expertise? A little bit loaded, but maybe you can, there are a lot of questions in here.
Sure, I appreciate it. Thank you so much. And I'm really glad that we're talking about it right now, because the question about whether AI will replace a human being in running operational due diligence, it's been something that professionals in ODD have been talking for quite some time. The intersection of human judgment and AI is becoming one of their defining questions in our field. So in ODD, it's a world of data and judgment. So AI really gives us an opportunity to process tons of documents at the same time in the matter of minutes. It gives us an opportunity to look at some trends and risk that it highlights. But the question is whether it gives you the judgment that's required. So the data will give you their answer to the question, what happened, but why? That's something that I truly believe in my heart. It still will be there. It still will be with the human being. That's something that is rooted in the expertise and judgment and intellectual curiosity of the people who run operational due diligence. So I think that's another element of this is AI is quite, AI machines are wonderful, they're powerful, but they're still quite literal. So this element of why is still going to be with human beings.
Fantastic. We'll go into more details a little bit later, if you don't mind. So Candice, you're attorney, Cayman Islands. You're representing Cayman Islands, is that correct?
Yes.
Where's the flag? Okay, so what's the standard expected of the directors and operators of a fund, and what are some of the key operational risks to consider when assessing a fund's governance framework? Now, before you answer this, can you explain to the audience the Cayman in terms of jurisdiction, how you guys are different from, Bahamas, all the neighboring islands, and why are you also so expensive compared to others?
I don't know why it's so expensive, but I wish it wasn't. As far as our standing, we are known as one of the best offshore jurisdictions for offshore structures, along with Luxembourg. we have a robust financial industry and a good reputation. So, and we're an English Commonwealth country, so that helps. In terms of the question you asked, the directors have a responsibility to implement a good corporate governance framework, and that includes adopting various policies and procedures that align with the business structure and what the fund is actually doing. That includes cybersecurity. So as you mentioned that all these developments and what funds can do with it, are they actually updating their policies and procedures to ensure that this aligns with market standards? And when they're delegating services to other service providers, and especially cross-jurisdiction, how are they monitoring those policies and procedures? Because the responsibility still remains with the directors.
Okay, great.
That's a great point.
ahead.
That's a new concept we're talking about. Everyone's using a vendor. Those vendors are using vendors. Where does that vendor chain end? That's an extension of your reputation as a business, right? So the due diligence of hiring and selecting the right partner for your business is important, and understanding what that business and partner is doing, and are they just leveraging technology of other partners they're using? You really need to unpack this, because we were talking about it before, I think, prepping up for this. The speed of AI is happening so fast, I don't think people are realizing it. And you really need to be on top of your game. So you got to have dedicated people focused on this. This isn't anyone's side hustle at a company. So anyway, it's the third level, fourth level of defense now we're starting to talk about.
Thanks. So now to Robert Materazzi. Brian Stern was supposed to be here. Robert has very, very similar experience from military. He was actually a pilot there as well. Brian was doing something a little bit different. Maybe you can explain the difference. But the reason that Brian was supposed to be on, I thought it would be good to have him on the panel, is because when you go into operation, you have to do amazing due diligence. So when you're going to fly, you have to check thousands of things in order to fly, right? I was once flying over Manhattan in a two-seater. Oh my God! I said, I don't want to do this again. But it was so small. It looked like a car, so small. I said, I'm not going to fly in that. And the pilot was checking like 300 things. He was checking. This is good. Oil. All this stuff. So, but you were flying actually it was a helicopter, Apache?
Helicopter,
So tell us about due diligence from that, and then we'll go into fund manager due diligence.
Yeah, it's interesting. When so I was a Super Cobra pilot in the Marine Corps for 9 years, forever ago. I got out in 2013, and I went to PricewaterhouseCoopers, where I was working in financial services, and very, very quickly, people would realize that I had an understanding of risk management, even though it wasn't financial risk management. And I usually hear people say that financial risk management is more mature than other industries in the business world, except for the military, where obviously the risks are even greater, right? So we're not talking about money, we're talking about lives. And you talk about aviation, of course, the risks are higher there. So it's very, very easy to get into that. And the same processes, particularly operational risk management, is very, very comparable, even though maybe the risks that we're looking at are different. But the process that we do to measure risk and to mitigate it, and to make sure that we're putting controls in place so that we make informed decisions ultimately, all of that holds true. And I'm sure that resonates with everyone on this panel. Even I don't know if we have any other pilots. So hopefully that gives some wave tops of how there are similarities between it. And I know later we'll talk more about some of the intricacies with crypto and blockchain, but you get into there's definitely some nuances as well.
Sure. So thank you, Robert. Anthony, as AI and digital tools becomes more embedded in operational due diligence, what opportunities do they create, and how should investor think about the corresponding cybersecurity risks that comes with this shift?
I'll hit on the good and the bad, and I'll give you an example of how we're using it. And I don't think it's a uniform thing that anyone's implementing, whether it's back office, middle office, front office. There's use cases everywhere for it. There's probably too many use cases for it. Where we're using it practically as a force multiplier. To put that in context, we have 40 people doing 800 units of work. That's where they max out. right? By using a force multiplier technology like AI, it's going to allow us to develop a co-pilot. So instead of sending 2 people on site, 1 person goes on site, and you have probably a better assistant next to you to make sure you're getting through all your questions and all your issues. That person then comes back, and all of a sudden that meeting note is already digitally dictated to them. Think about, you mentioned it before, Jennifer and Alana, like the paperwork, the sheer reading the footnotes, that work is going to get so much easier with AI. Now, the challenge is the skills to oversee to make sure the machine is working well. There's still hallucinations. It can't do math that well. If you tell ChatGPT to show you a clock showing 9:30, I bet it's going to have a hard time showing that image to you. That's going to improve. So at the same time, we have to worry about the technology right now at this point in time, but where is it going to be in the future? And that kind of lends to the bad guys. Cybersecurity, that cost is going up incrementally every single year because the bad guys also have this technology. Okay, there's been use cases in the industry. I talked about this yesterday, where millions of dollars have been wired out from deepfakes. So as we get more efficient and better, and have to oversee the machine doing the work, we have to understand the bad guys are doing the same thing. And I use a steroids analogy. I used to love baseball back with Barry Bonds and Mark McGwire. Those are the good baseball days. But the bad guys are always 1 step ahead of the detection, right? And once we figure something out, they're already on to the next deep fake, the next phishing scam, or something we're not even thinking of right now using this technology. So it's excitement and wariness at the same time. Those are just 2 examples I'd highlight.
Great, great. Excellent, excellent examples. Jennifer, which bank is the oldest bank in the United States?
Bank of New York Mellon.
Okay, so on that note, as the oldest bank, how is BNY leveraging its NVIDIA and OpenAI partnership across the firm? Now, this conference is about high-level finance and high-level technology. So I think it's a perfect question, I would say, right, to address.
It's a very interesting time to be at Bank of New York Mellon. As you said, it's the oldest bank in the U.S., 240 years old, and it is very AI-driven forward. BNY partnered with NVIDIA last year and partnered with OpenAI this year to really enhance its AI capabilities. BNY's belief is that AI is for everyone, everywhere. And so with these various partnerships, BNY has created its own in-house and enterprise AI platform called 𝐒LIZA, nicknamed after the wife of Alexander Hamilton, the founder of BNY. So with 𝐒LIZA, all BNY employees, 50,000 employees, have access to this platform, enabling everyone to create an agent in about 5 simple steps. And within our ODD team, we have created an agent. It's called Odin, Operational Diligence Intelligence Node. And it essentially functions like your, fancy co-pilot, like a person that can just do things that typically would take some time for a senior analyst to do. And it is running through the due diligence questionnaires, LPAs, offering memorandums, and it's highlighting red flag risks for us. It's going through those same documents and selecting the service providers so that we can generate service provider emails. So it really allows the senior analyst to focus on evaluating risk rather than just formatting reports. So it's a very exciting time for us. So it's,
Amazing, amazing.
Yeah,
So
I just want
go
to
ahead,
add
please.
something because different companies have different approaches and different budgets of how they utilize AI. At Russell Investments, we went slightly different route at first at operational due diligence. So what I did on my team, in addition to very experienced, over 20 years of average experience on the team, members of the team, I decided to hire an AI specialist, not an ODD specialist. He had no clue what ODD was, but he was an AI specialist who was very hungry to learn and to contribute. It was very interesting to see his applications, how he runs the programs, how we explain what exactly we're trying to accomplish. So again, different firms have different solutions, but AI is definitely in the future.
Sure. So I have a follow-up question for you, Alena.
Sure.
How can biases in both human decision-making and AI algorithms be recognized and counterbalance within the due diligence process?
You know, it's at the end of the day, it's not, it's a really good question. It's not really whether we use AI and it will replace the human beings. It's actually collaboration between both of them that's important because, of course, AI has certain biases. They run algorithms, but they can't really explain what is behind the event that is happening right now. For example, the algorithm reads the risk that there is a higher turnover at the firm. Can they explain what it is? Not really, because the human being can look, and professional, especially ODD with certain experience in the field, can say, okay, this is not really a bad event. Their senior management who is restructuring, not just doing a cost cut, but they're doing a smarter business. So definitely the collaboration, human being and AI is important. Human beings have our biases as well. We do look at certain things that are more subjective and we could be biased to it. For example, we're sitting in the room across from the CCO and we feel he's a little obnoxious, but you really have to send it aside and really have to look at what's behind it. Is he an expert in the field? What does he know? So at the end of the day, I think it's smart collaboration, AI and human beings. That was the future for the ODD.
Yeah, exactly. So, Candice, what level of operational due diligence is required on fund service providers like yourself? Is trust sufficient? And what level of responsibility does the governing body retain in respect of outsourced functions?
I think I touched on some of this earlier. Obviously, the board still retains responsibility for those functions. So you have to test their policies and procedures as well as their systems, but also testing that the service provider understands the investment strategy and stress testing some of those circumstances where they might need to produce a report. How is that report going to look? And what qualifications are going to be included in there? How are you documenting the changes that are happening to these reports over time? Yeah, to ensure
Okay, great.
that they're, yeah.
So any one of you is doing due diligence on crypto? No, right? Oh, you do already? Okay, great. So you will be able to, talk about it along Robert. So Robert, how is ODD different when we look at crypto funds?
Yeah, and Anthony, you kind of touched on this earlier, importance of clean data that you can rely on, security master data. There's a ton of different data, right, when we're looking at funds particularly. In crypto, and like we mentioned on obviously on the prior panel, was this data has to come from very different places when we're looking at crypto assets. And unfortunately, there's too many different places to get it from, and those places use inconsistent formats. And there's a lack of standards that the ecosystem's been working without for quite a while. So I'd say you still need the same things when you're doing traditional diligence, but the ways that you're going to get it and how you're going to look at that data might require very different expertise at a high level. And this isn't a small complexity. It can turn the due diligence process into 100 times effort, even with
Can you
AI.
give us some
It's
examples
a
that
huge-
you found out that was not regular? You've been dealing with you have lots of
Sure.
that look up.
When you're looking at something like fair market value of an actively traded asset, we look at traditional markets, you get the 4 p.m. price of Microsoft from NASDAQ, right? Or from a traditional market data provider that's using NASDAQ prices. And all of that exists. You know where to get it from. If you go and get it from S&P, who bought IHS Markit that had that business, or you get it from Bloomberg, or you get it from another big data provider, you're making maybe buy decisions on how much it's going to cost, but really the product you're getting is pretty similar. They're not going to differ much. In crypto, they all differ just vastly. And so the vendors are tiny. Most of them are not profitable. So you actually have to look at the companies and the vendors when you're thinking about third-party risk, selecting the partners that you're with in a different way, making sure they've got proper cash flow. You go and sign up for a vendor and they're bankrupt in a year. Obviously, that's going to cause a lot of complexities. So when you're thinking about redundant third parties that you're contracting with, you're thinking about redundant data sets maybe, and the ways that you're doing it, it definitely requires some very different expertise than before, even though the principles hold true.
Sure, sure. Anthony, go ahead.
When I look at digital assets, to me, being an ODD professional, this is what we're here for, right? The new, what's on the docket. Just like we have to switch from public market due diligence to private market and alternative due diligence, and the nuances there, that took training from the field. But when you look at equities and bonds, and you look at the ecosystem around it, say compared to digital assets, you have Bank of New York Mellon, you have J.P. Morgan, you have State Street Bank, you have a lot of these institutions that are part of the ecosystem in that space. So, there's that old saying, you're not going to get fired for hiring Fidelity, right? So that's a key integral part, whether a DC plan or a custodian. When you get to digital assets, to the point you were making, the ecosystem is changing every single day. And we're a trust and verify business, okay? So when you get the public equities, you get the bonds, okay, show me your trade transactions, show me the prices, show me your fair value committee meeting notes and minutes. It's all there. You just have to know how to ask for it, get it, and how to assess it, and how to write it up. When you're going and depending on crypto, it could be very different. Look at the custody side. There's hot storage, there's cold storage. Why do you use those two? What are those things? These are new concepts and terms. So when we approach it, we're not trying to be the authority figure in digital asset due diligence. We're going in with our eyes wide open. We're having those discussions with our clients, and we're learning, right? I do think we're past the pets.com version of crypto with Sam Bankman-Fried and FTX. And when you point at due diligence of that was just FOMO. That was no due diligence. So what I do think in the crypto and digital asset space is you need those bombs to kind of go off in a way, unfortunately, for people to realize it comes to assessing who's in front of you in the room, bringing it back to the people. Why did this group together? What's their backgrounds? What are they trying to achieve? And what channel are they trying to segment? A lot of our work is in fiduciary channels like pensions and 401ks. When you get into the not-for-profit and you get to the wealth management channel, where I'm seeing the proliferation of digital asset managers, there's less regulatory guardrails around that. And at the end of the day, I think what we're talking about, the human side, procedures, policies, rules, regulation, that's the rules of a football game. That's the lines on the field. It doesn't stop Bill Belichick from filming the other sideline. It doesn't stop players from jumping out of bounds to try to win the game. So that's just a reality. So going in with an open mindset on both AI and crypto, I do think it's here to stay. So we need to be at the forefront.
Great. Thanks. This is great. So going back to not non-crypto world. So what are some of the red flags, classical red flags in your ODD review, Jennifer, and that almost always lead to recommend against investing in a fund? Can you describe any exceptional case studies where you overrode your own red flag criteria and still proceeded with an investment? And I think this question is okay for Elena as well as yeah. Go ahead, please.
Certainly have seen a lot of red flags, but when we do come across red flags, they're not automatic deal showstoppers. We view them as opportunities for the manager to improve, and we look to see how they are addressing these inefficiencies. Typically, it has to be a combination of a lot of yellow flags that would lead to an ultimate risk rating of a high risk or a deficient manager. I'd say some common red flags would be unfamiliar service providers, a lack of a fund administrator for hedge funds and even private equity and venture capital funds. We're looking at controls for valuation. Aside from a manager having a valuation policy, we're looking for them to have a committee. So that's an example of a best practice item that we
Right.
would recommend to a manager.
Mhm.
But there are showstoppers where there is an SEC enforcement action or disciplinary history against the firm or its principals. And what we're looking for is transparency from the manager. If they can be forthcoming about those issues, then on the flip side, if they're downplaying those issues or not being transparent, then that would be a red flag. So, some examples would be where a manager had allegations of securities fraud in his background, and he downplayed that,
Right.
calling it an administrative matter. Another example, just asking about their code of ethics and compliance at the firm. They said that there had been an uptick in personal trading violations, and we know that can happen at firms. But upon further questioning, the compliance team disclosed that it was actually the founder of the firm who had done these personal trading violations, and that led to us to believe the tone at the top was not a high priority, and so we rated that manager deficient.
Sure. Thanks, Jennifer. Elena and Candice and Robert, same
Sure.
question.
Sure, and I would like to continue the theme of transparency. It is very important our relationship with the manager is built on trust. And sometimes when we do discover certain things, like during the background check is part of our process, operational due diligence process at Russell, and that is run by independent company. If we discover something that, again, is concerning to us, or sometimes it's at the end of the conversation, as a part of our process, we do have a veto power where the portfolio manager is not going to proceed with the manager. If we mark the manager deficient, that means the manager is not up to par to be part of our product or to invest money for one of our clients. So transparency is important. Sometimes if they don't disclose something to you, we're definitely not happy about it. But even if they do disclose something to you, there are definitely things that we will say no to. In addition to reputational risk is a big deal, and if you are tainted, so to speak, it's really hard to erase in our industry. It's a small industry at the end of the day.
Sure. Thanks, Elena. And going.
I would just say that the fund needs to continue to do operational due diligence on itself. It needs to be testing these things often, and it has to document its reports on these tests as well. If a fund is always saying that it doesn't identify any risks, that's probably suspicious. There's always room for improvement, so
It's a
keep that in mind.
continuous process, right? And Robert.
Yeah, from the lens looking at maybe crypto funds for the same question. I mean, all of the same things that you need to accomplish, like we've said, still apply. There's obviously a lot of reputational concerns when we look at the crypto industry. A lot of them are meritless. Some of them are very true. So you have to sift between, just like doing it, you have to do background checks. You've got sometimes some very young founders, some very young CEOs that are not going to have the credentials that you're used to. Doesn't mean they're doing anything wrong or that you shouldn't partner with them, but it might make it a little bit more challenging to convince your stakeholders to do so. So, I mean, these are some of the challenges that we get there. It's very tricky. And I would say, though, when doing it, I mean, there's a risk of missed opportunity if you're kind of blindly preventing yourself or your organization is blindly not trusting companies because of some of the stuff that you just see in the press. I would avoid that and just do proper.
Anthony,
proper due diligence.
can you go into more like now specifics? Like, give us some case studies. You've been doing this for a long time, and no need to name names, right?
Yeah.
But describe what these companies are doing. So.
I'll play off 2 points you made. I think they were really good. We have senior people in this industry. We have junior people in this industry. We have mid-career people in this industry. So how you ask a question is really important. I'll give you an example. We came in late to a due diligence. It was a merger and acquisition. Someone had cold feet. We're like, let's just bring in Tony's team real quick just to check this. It was at the end of the process. They did the due diligence already. So it turns out the lawyers were there, where all the bankers were in the room, and it came up to, did you have any SEC violations? Okay. When that question was asked, the answer was no. They did not have any enforcements done on them, but they did have a letter from the SEC that they were investigating them. So it became, we asked a question, well, do you have anything ongoing with the SEC? and you could see them all clam up. They asked a question that we now have to admit that we have this letter from the SEC and we're dealing with it right now. So it just kind of shows the skill and the difference, and that's why we pair up junior people with senior people and challenge people. When it comes to war stories, one I always like to bring is, again, bring it to the people side and trust side. Everyone who works at a fund, small or big by now, should know operational due diligence is a requirement for certain channels. So, we used to be in a day where private managers, some of the hard to access funds would say no to ODD, take my pre-canned video, watch that and feel comfortable with it. They were in a position of power. They were able to do that. Now we have the democratization of alternatives and private assets. So there's more of a distribution need. So a lot of these players have to do the due diligence that they fought. So I just think like asking the right questions and what's their level of engagement when we reach out. Do they respond quick when we say, hey, we'd like to come on site and do diligence, or do they wait 3 days to get back to us? We tell our clients the clock starts when we sign our contract, and they tell us to go assess that manager. So we had a manager, I won't go into names, unresponsive for a few days, normal-ish. A week went by, we went to the client, we reached out several times, different emails. We get a call back, he's in his car, it's the owner of the firm. And he said he was in the war and he had a brain injury, and took him a very long time to respond to questions in written format or verbal format. We hung up the phone, we called our client and said, this guy doesn't want to answer questions. Apparently he has a brain injury. Next thing you know, the funding never happened with it. It was just his sheer unresponsiveness and the really weird reasons of why he couldn't answer questions. Sometimes that's all you need for a client to have a red light.
It's a gut feeling as
Yeah.
well, of experience, right?
Yeah.
Yeah. In the absence of regulation, Jennifer, managers are left to build their own AI frameworks. From your ODD perspective, what practical framework should managers adopt?
We are not seeing a lot of AI policies right now, and we're seeing a lot of a variety of tools that managers are using. So not a lot of policies in place, but just variants of tools. And I think it's because we're very early into using AI, and firms are still gauging how they're going to use it and who is going to use it at the firm. So when we are inquiring about the AI use at a firm, we're asking them about how they're planning to use it. Is it for operational efficiencies, or on the flip side, are they using it for some type of decision making in the investment process? We're asking who has access to these tools, and then what are the guardrails in place? Where's the oversight? And what are the risks that are coming up from this use? Is it cyber risk or privacy risk? Perhaps even bias risk as well. So right now we don't have a framework in place because I don't think many firms do just yet, but we're inquiring as to how they're using it, who's using it, and what the oversight is.
So, Alena, in connection to previous question that I asked Jennifer, to what extent should final ODD assessment remain a human responsibility, even when AI provides risk flags or trend analysis?
It's a great question, because at the end of the day, AI definitely can track the risk factors and the trend analysis, but at the end of the day, it doesn't really understand the consequences of certain events, and it doesn't grasp fiduciary responsibility or reputational impact of a poor operational performance. So this is why I truly believe at the end of the day, it's truly a human judgment. It's a human call how this data is interpreted. Because like Anthony described, sometimes you're sitting in the room and you are the way how you ask the question, the way how this question is translated into your experience is important. As an ODD professionals, we do use some tricks, tools in our toolbox, how we do, it's almost like a detective. You look for clues, you look for body language. You have to see, if you can see, the tone from the top. The cultural aspect of it is very important. How people in the room relate to each other. All of that, unfortunately, can't be in the AI algorithm, but that's something that the human being can observe and can assess and actually make a decision at the end of the day. So I do believe that using AI tools is extremely important, and using common sense approach in lack of certain policies and procedures is very important. Again, it's a common sense. Do we have controls? Do we have a mitigating controls? What is the risks involved? But at the end of the day, it's again a human person with certain experience who will make a call on the ODD, on the manager, or on what is going on with that particular operation on the fund.
Okay, sure. Candice, from an attorney perspective, can you elaborate a little bit?
Well, as I mentioned earlier, it's always going to be down to human judgment. The board has to make these decisions. They have to be assessing this, and they have to be doing a real risk assessment. They can't just say, we're not aware of anything. How are they testing the operations of the fund and everything as well is important.
Sure. And Robert, what other risks do we see when selecting third-party vendors in the digital asset industry specifically?
Yeah, so touched on that a bit earlier. There's again, it's when we look at digital assets, it's much more nascent. So you're going to have things are going to be imperfect. It doesn't mean that you should pass on that that investment or that decision just because of it, because there might not be an alternative, honestly. So I'll see, for example, if you're picking a vendor, they're a startup, and they're a key component of the fund that you're putting together or whatever, you might want to get a redundant vendor in case the first one goes away, where traditionally you didn't really need that redundancy because you weren't really focused on the business continuity of your third parties, rightfully so. So I'd say, just to give you one example, actually AI policy, I can touch on that as well, is interesting, because I was the CEO of 𝐎𝐩𝐞𝐫𝐚𝐭, a technology company, and I think within 12 hours of OpenAI releasing ChatGPT, we had an AI policy. And it was because we're managing customers' data, and I knew that our customers were going to ask us, are you putting our data in this new AI tool? And I wanted to be able to say with confidence that we were not, because we restricted it from a policy perspective. Because it would have been really easy for a developer or a customer support representative to copy and paste, to get an insight, to test it out. And now all of a sudden you have a data leak or something that you have to explain to your customers. So
Sure.
I'd say a lot of those key decisions. So it's funny, because you get a large like BNY Mellon, right, putting a new policy in place. I don't know how long that would take to do, but it probably takes more than 24 hours, right?
That's true.
To get the final CRO approval, or whoever the stakeholder is that's doing it. At a small startup, I'm able to do that almost instantly. So sometimes these smaller organizations that are less bureaucratic do have some advantages, provided they've got that risk mindset up at the top. So I think that's the big takeaway, right? That risk culture.
Okay,
is
let's
very
go back to future now. Looking 5 years out, Anthony, do you think the winning firms will be the ones who rely heavily on AI-based governance tools, or those who double down on human relationships and trust? And where do you see your company, Mercer? And we'll go. The same question applies to everybody. 5 years out.
I think AI is an arms race. I think we're in the early innings of it. So I think 5 years out, the winners of this are going to be the ones, and I think you hit a couple themes here, right? Where small has an advantage over big. And I think eventually AI flattens org charts and makes big firms a little bit more easy to navigate, but efficiency. Okay, so I think the big thing about it, you talked about missing investment opportunity. ODD is a tax on the industry. It takes time on both sides. It's labor heavy and it's research. The quicker we could do our job, the more efficient we could do our job. And there's limits of humans, right? We talked about human judgment, all the good things about humans, but if you send two people to an ODD meeting and sit for 6.5 hours and have a very deep financial conversation, what were the moods of those people that day? Did I hire the 40 best note takers in the world? I don't think so. So this is where AI is really going to do it, but it's not without people. It's getting the right people that have that forward-thinking mindset of a technology that's going to continuously evolve, right? And it's, I kind of see two camps of ODD professionals. You have the job huggers, and you have the people that see the light of this tool being such a tremendous aid to take away some of the the worst parts of this job, the actual writing, the actual reading the footnotes. And I just think it's going to be a very, very uplifted industry of efficiency, a much more of a sharing ecosystem, particularly with the smaller, more nimble managers sort of entering the fray. I'm very optimistic about the next 5 years. I don't think we're all going to be here in 5 years. I do think this is going to lead to more consolidation that we're seeing, more partnerships, more mergers and acquisitions, because some managers aren't going to be able to do some of the things that are needed to be done in 5
Very
years.
extremely expensive as well, time consuming. It's all data science. So Jennifer and Alena.
Yeah, I share Anthony's optimism about the efficiency that AI is bringing to the operational due diligence process. I don't believe that it will replace ODD analysts. As Elena was saying, it's the transparency and the human judgment that is really the key element of the ODD process. So I would hope in 5 years, our small AI agent that we just developed in September will really bring further efficiencies to our process. Right now, we're looking at 500 of our historical reports to see where our personal biases are and seeing where our inconsistencies are. So we're hoping that this tool will really shape our process going forward.
And I will be brief. I think the future will be in learning, ODD analysts learning from AI and AI learning from ODD analysts. And basically, that will be, we have to be flexible. We have to retool ourselves. Looking forward, we have to make sure that we are flexible enough to be in the future and to be in the driver's seat. So with AI help, and being efficient. So definitely the collaboration is very important, but learning from each other is truly important as well.
A little bit different question, from you're an attorney, so it's a little bit different. How is this affecting your work?
Well, I don't think that the laws and regulations have caught up at all yet. I think that's going to take the longest process, but we definitely have more interest in funds investing in digital assets, wanting to subscribe and pay for things with digital assets. So that's shaping the way that we are forming the documents and everything. And once the legislation catches up, hopefully we will be ready.
Okay, and how is your legislation different than other islands? Is it more friendly or it's more strict, right?
It's quite a strict regulatory regime, but I don't think it's overburdensome. I think, again, it goes to our financial standing and reputation, and that's why people come to our country in the Cayman Islands.
Robert?
I'm very curious, I guess, looking forward. I think we need more ODD on AI to get comfortable, because if we become too dependent on it and we have an outage or some type of a business continuity issue, and now we've ingrained this new great tool in so many processes where we don't have the people to back it up, I think that it could cause some tremendous issues. I mean, it's obviously solving so many things before we get there, but I think it's important not to ignore the risks associated with our dependence on it as well. Kind of like, I relate it to pilots that I think the more modern pilots fly by the wire, and most of the aircraft does the flying for themselves, but those systems fail. And the new pilot now all of a sudden doesn't know how to fly the aircraft, but the old pilot still does. You could apply the same metaphors to engineers and other technical.
Perfect analogy, and so we'll end our discussion right here. And please applause everybody. Thank you.